are live for another Daily Rates live show. We'll give everybody a few minutes to get connected here so we can get started with today's rates. Today's topic for our deep dive with Jose will be for our non-QM bank statement loans. So that will be what we will go into detail here a little bit later. But for now, let's just give everybody a chance to tune in, and we'll get started here in a second.
Thank you, and hello everyone who just tuned in on whatever platform that you're on. We appreciate you tuning in. As Nick just said, we're going to wait just a couple of minutes here. Give everybody a chance to jump on and tune in. We're going to get into some of the rates here for today, and then as Nick said, we're going to jump into kind of a deep dive here on bank statement loans as well today after we go through some of the regular pricing. And we'll have Jose, 27-year veteran in the industry, talk about how we can use bank statement loans to our advantage here. So with that being said, why don't you go ahead and get started, Nick, with the first part of the presentation, and we'll start to go through the daily rates live here.
All right. Thanks, everybody, for joining us today. Today is January 12th, 2023. We're going to go through the live mortgage rates for today. From our company, we are the Mortgage Calculator. My name is Nick Hiersche. I am the president and founder, and we are a lender that specializes in alternative documentation programs, as well as conventional FHA, VA, and USDA. Some of our alternative documentation programs that we love to offer for our customers include our bank statement loan options. So that's probably the most popular option we have for our self-employed borrowers. So I'm going to have our sales manager, Jose Gonzalez, with 27 years of experience, talk a little bit more about a specific example of the bank statement loans here once we finish going through the regular rates. I'm also joined by our COO, Kyle Hiersche, who will go over towards the end of the presentation just how to connect with some of our teammates. So without further ado, let me get into the live rates for today. 1 second, let me pull up the rate tool and we will get into it. So this is a tool that we've built for our mortgage professionals. So again, this is a private tool. This is only for our mortgage officers. So if you would like a quote, please get one of our mortgage loan officers who can provide you a detailed quote in about 5 minutes here using the system. But for today's show, we're just going to go over some general rate indications and use some basic scenarios to just check out what's going on today in the markets and see what our rates are for today. So as we do every day, we're going to start with a basic scenario. Most common scenario going to be an 80 LTV. That means 20% down, 80% loan to value. We're going to set our desired price at 99. What that means is we're going to get a 1 discount point in cost, right? Most customers in today's market are asking to buy down the rate a little bit. So typically all of our quotes are going to have a little bit of cost. So we'll use this 99 setting, which will allow us to quote everything today with 1 discount point as our target cost, which is typically a request from our customers. We also have the 2-to-1 temporary buy downs, all the crazy stuff you hear about to lower your rates. We have those options available. But for the show today, we'll just go over some simple scenarios to keep everything pretty basic. So we'll keep the loan type as conforming. As I mentioned, we specialize in expanded guidelines, is what we call non-QM. We also offer FHA, VA, and USDA. So we'll go over a few options today and do a deep dive in a little bit on the bank statement options with Jose. So the first example, we're going to do the 80 LTV, conforming, purchase, 30-year fixed, pretty much what everybody's used to for a primary home, regular single-family home, 1 unit, and we'll use Florida, Miami-Dade as our setting. That's where our office is based. So we will use these basic settings for all the quotes today. We will also use an estimated FICO of 760 and an estimated debt to income ratio of 40. So we'll use these same settings for all of our quotes, so everything looks the same as we pull them up. But let's check out what we have today. As you can see, this is a live tool, so I have to get through the security check. So we can pull up our live rates. Oops. failed the security check. Let's try that again here real quick. Everything looks to be set up correctly. There we go. So you see here are conventional options. So FNMA means Fannie Mae. This is Freddie Mac. These are specialty programs that are for typically first-time home buyers or buyers under an area median income. So these are great options. They're a little bit specialty. So let's scroll down to our first regular option that's not a home ready or a home possible. And it looks like it's right here. Conforming 30-year fixed. Rates have gone down. Yesterday they were at 6. Today we're at 5.875 for a 0.75 in discount points. So this is the best option the computer has found. Obviously, we have tons of other options in between. But today, the rates have gone down since yesterday and the day before. That's why we love doing this show every day. So we have a few different options, obviously, within here. Please get with one of our loan officers, and they can pick the right program just for you. Now, let me go back to the Quick Pricer tool. And we will pull up, again, an 80% LTV scenario. Now, if a customer does not qualify for a conventional conforming loan, typically the next option is FHA. So we'll pull that up real quick, do an FHA loan. Everything else will stay the same in our little scenario here. And let's check out what the FHA rates are this morning. So again, a little bit lower than they were yesterday, I believe. So this is awesome. Obviously, everybody loves the trend of downward rates. So our FHA program right here, the best option is going to be 5.375 for, again, the target of 1 point in discount cost. One thing to keep in mind, like I always say every morning here, FHA does have additional costs, such as monthly mortgage insurance and an upfront mortgage insurance premium. So you want to check out the APR here if you're going to compare apples to apples. If you qualify for both FHA and conventional, obviously you may want to lean towards conventional because of this cost there. But obviously you can compare both side to side. We'd be happy to quote both. A lot of times borrowers do not qualify for conventional, so they have to go with FHA. But there's still some great options for us here. Now, the beautiful thing about our company, the Mortgage Calculator, we are a lender that specializes in non-QM programs. What that means is if a customer does not qualify for conforming or FHA, or of course their specialty programs, VA, remember that's for our armed forces veterans. If you do qualify, that's amazing. We can quote that in just a few minutes, but not everybody qualifies because not everybody has served. So we thank you for your service. Please get with our loan officers to quote that. Same thing with USDA, the property must qualify. USDA is only for rural properties in a rural area. If you're searching in a rural area, we can quote that up in just a few minutes. But typically for most buyers, the options are conforming and FHA. And if your lender doesn't have any non-QM options, you're stuck after that. That's where we come in. We specialize in going above and beyond the conforming guidelines and above and beyond the FHA guidelines to then use our expanded guidelines program to do all kinds of different cool stuff. We have thousands of programs under these guidelines that allow us to get very flexible, especially for self-employed borrowers who often have a hard time qualifying via conventional options. So here we're going to pull it up to 80 LTV again, 20% down, 80 loan to value, 1 point discount. We're going to keep everything else the same. But you see now a new menu popped up here. So when we're in the non-QM space, when we're doing our non-QM loans, we can use a ton of different options for income verification. So we have thousands of programs that vary within all these different options. So please get with our teammates. Jose will kind of go into a deep dive of one program of those thousands as a deep example. But we have 1 year alt doc, 2 year alt doc, asset programs, bank statement programs, usually 12 and 24 months are the most common. DSCR is my favorite program of all. We'll talk about that in a minute. These are kind of the same. These are only for investment properties, so we can't pull that up here. And then personal bank statements, 12 and 24 months, very popular. Then we have some other specialty options as well. So for today, I will pull up a bank statement option. This is our most popular request when someone maybe is self-employed and they do not qualify for a conforming or an FHA loan because of the way they file their tax return or whatnot, whatever it is, they may not qualify. So we will use 12 months of their bank statements in order to determine a debt to income ratio. So that allows us to qualify these borrowers who would otherwise not qualify. And we're able to determine that they do generate income, and we're going to determine that from their bank statements. So this is still a good loan. This is not, subprime, as some people like to call it, right? we are making sure that everybody does have significant income to determine a solid debt to income ratio for those borrowers. So these are great options for borrowers who would not otherwise qualify. So let's check out the options we have today. So now obviously the rates are going to be a little bit higher on all of the non-QM options compared to conforming. But again, this is for a borrower who would not otherwise qualify. So still amazing options. Some specialty programs here for a 7% rate for just under 1 discount. That's amazing. A lot of variation in these programs. These programs vary widely. Some of these programs allow credit events, right? Conforming loans, you can't get a conforming loan if you've had a credit event such as a foreclosure or a short sale or a bankruptcy. A lot of these non-QM loans do allow us. So get with one of our loan officers. They can see which one of these dozens of bank statement options might allow for a special credit event. That's typically when you get up here into the high rates, that's because there's some special reason why that program allows a foreclosure, for example, in the last year, other things like that. So please get with our loan officers. They can navigate these dozens and dozens of programs in order to find the one that fits you best. But we have options that range from about 7 to 7.5 and all the way up into the 10s. Those are probably the more specialty programs, as we mentioned. So these are great options for our borrowers that would not otherwise qualify. So let's switch gears here and move into investments. So we love to work with investors. That's probably a good portion of the loans we do here are for investors purchasing investment properties, whether it's a hardcore real estate investor as a profession or someone that's just purchasing an investment property for Airbnb, for supplemental income, etc. So very popular requests these days for people purchasing investment properties. And we will pull up an 80 LTV example again, 20% down. And we're going to go through our options here. Remember, for investment property, you can't use FHA, VA, or USDA. So we're stuck with either conforming or expanded. Those are the only options when someone's looking to purchase an investment property. Now, because of the rate environment today, you'll see there are some drawbacks to going conforming conventional here. But we'll go ahead and pull this pricing up. Everything else will stay the same as all our other items. But keep in mind here, you're going to see a significant cost here to all the conforming loans. That's because Fannie Mae and Freddie Mac, the GSEs, government-sponsored entities that basically insure these loans, added a penalty, right? This isn't us as a lender. This isn't anybody raising the rates. This is just basically a penalty that's been assessed because they don't want to do too many investment properties. So over the last year or so, they've added a penalty. So you see a very significant discount point cost here because of that penalty. So we still have some great rates, but high costs. So a lot of times we'll have investors come to us and say, hey, I love these rates, but I don't want to pay 3 points or 2.5 points in discount in order to get that rate. Do you have any options for me to save cash out of my pocket and possibly not have to use my full documentation income? So these options are great. If you qualify full doc, you have tax returns, you make great income, W-2 income, whatever it may be, that's amazing. But a lot of our investors don't technically qualify full doc, but they're very successful real estate investors. So in that case, that's where we come in and we have thousands of options for investment property purchases for 80 LTV. And we do that under our expanded. So if someone doesn't qualify conforming or maybe maxed out their conforming limits, some of our investors have 50, 100 properties. You can only finance 10 conventional no matter what, right? So if you hit your limit, you're going to have to use some other option. Or if you don't qualify with full doc, you're going to have to use another option. That's where we come in. So when we click on expanded here for an investment property, we have a couple boxes that pop up. Of course, we get our income documentation. Our most popular one here is going to be DSCR. So that's the one I'm going to choose today. We can obviously do alternative documentation, bank statements, all the stuff we talked about before. But the option that opens up when you do an investment property for a specialty option is this DSCR. That means debt service coverage ratio. What that allows us to do is to do the loan for investors to purchase investment property without any income documentation or any employment documentation. We're just going to use the property rent to see if the property rent covers the mortgage payment and PITIA, right? So these are the easiest loans we can do, and they're very nice for investors to purchase and expand their rental property portfolio without having to worry about all the limits of the conforming programs. So you'll see here, because of the additional costs in conforming too, even people that do qualify conforming are sometimes choosing an investment property purchase under the expanded non-QM guidelines. Now you see this other box that popped up, prepayment penalty. Whenever we do expanded guidelines, non-QM programs, for an investment property, we always have a prepayment penalty as a standard pricing mechanism here. So we're always going to quote it with a 3-year. That's pretty standard. However, you can do a no prepay if you wish. That will just cost a little bit additional cost. So for our show today, we always do just 3 years. That's kind of our standard. So let's check out the options we have today for a no income, no employment, purchase an investment property for 20% down option. And this is really what we love here. So you see we have just dozens of options for these DSCR programs, and they're going to range a little bit higher rates. But notice here the discount points are much less because these non-QM programs, we can actually go up in rate in order to lower the costs to you, the borrower, or if you're a realtor or a loan officer watching this, to your customers, right? So we have ones that range from 8.25 for right around 1 point. That's a great combo there. An investor may choose that over conforming because less points, less money out of pocket, right? 20% down plus 3 points is a little bit different than 20% down plus 0.975 points, right? The higher rate doesn't scare away investors a lot of times because the property is going to cash flow and rents are raising all across America, right? So typically our investors are more interested in getting into the property for less down than worrying necessarily about the rate. So that's where this DSCR program comes in. Everybody knows there's going to be a little bit higher rate, but they're great options that allow us a lot of flexibility. So we have some that range around here. Obviously, you can go lower in rate, which Jose will talk about and show all the options as he does a deep dive here in a minute. And we just have dozens of programs with different DSCR ratios. There's some with different prepayment penalties. So just a lot of different programs. Please get with our loan officers to navigate these. That's why we specialize in non-QM. It is very difficult. Not every lender does this, and not every loan officer knows about these programs or how to navigate these. So please get with our team members. They know exactly where to fit you within all of these dozens of programs that pop up here on the show. So that's it for today for the live rates. What I'd like to pass it off to is Jose to discuss a detailed example. Let me go ahead and stop sharing my screen. A detailed example of our bank statement non-QM program. So I pulled it up really quickly there for a primary purchase. Jose's going to have a couple examples for primary and investment, but he's going to go through in detail, show the whole stack that we call it, so that you can see all the buy down options and talk a little bit more about the ins and outs of the program. So let me go ahead and toss it over to you, Jose, and I'll get your quotes ready.
How's everybody doing today? Thank you for joining us for daily mortgage rates at the Mortgage Calculator. Today, bank statement option, which is the most popular non-QM alternate doc option right now. I think we were talking about more than 60% of the loan applications being generated in non-QM are bank statement options. And that's obviously a reaction to what has been going on with the interest rates since January of 2022, when our rates were, under 4% for this option. And now, obviously, that's not where we are, but it has become the most popular option because the conventional rates have increased. Some of the full doc borrowers were, quote unquote, priced out of the range that they were looking to go full doc. But if they are self-employed, they do have the bank statement option. Very good option here. So now we're going to go over first is a primary bank statement option. And actually, it's 10% down on that one. Sorry for the title. Was not updated. There we go.
Refresh it. There you go.
Yeah. Okay. Primary bank statement option, 10% down. Now, again, this is just using either 12 months of business bank statements or personal bank statements. Sometimes you can use from 2 separate accounts, business and personal, if you have deposits going into multiple accounts. But the best thing about this is no tax returns required, and better, no tax transcripts. As you know, that can delay your closings. The IRS is like 2, sometimes 3 weeks behind on processing those 4506 transcript requests, which could blow your deal if the seller doesn't want to give you an extension. So here we have rates as low as 8.375 with roughly 2.2 points there on that scenario, with the lowest cost option actually giving actually giving a lender credit of $563 at a 9.5% rate. Keep in mind, this is only 10% down primary, no mortgage insurance. So when you are doing your calculations, comparing this to the hypothetical, what if you were going full doc conventional, which obviously would not be possible because your borrower is going bank statement, but they always like to put things into perspective. The conventional option will have mortgage insurance above an 80.0% LTV. So this option at a 90%, no mortgage insurance, which makes the rate even more enticing. So if that's not good enough, now we will share the investment bank statement option, which only requires 15% down, right? So still better than 20% down, better than 25% down, which is usually where you're going to be on an investment conventional loan, having to go full doc, tax returns, transcripts, pay stubs, W-2s, whatever it is your borrower's full doc income scenario, but it's going to have to go full doc with tax, transcripts and all that kind of stuff. Here, we're looking at only 15% down payment. Again, no mortgage insurance, using only 12 months personal or business bank statements or both, with the lowest cost option being 9.375%, with a cost, I believe that was around 1.875, somewhere around there, with the lowest rate option buy down to 8.625%, with a little bit over 3 points in loan discount cost. So again, very good options, only 15% down, as compared to 20 or 25% down for a full doc conventional option. So you see where this is very exciting for the investors. You could see how if you're not using or adding non-QM to your arsenal of tools, you are leaving money on the table. Because if you have that borrower that comes to you and doesn't fit that agency box, and you tell them, I'm sorry, there's nothing that you can do, you are doing a disservice to your borrower, because there's a lot of things that we can do, as evidenced by the surge in non-QM loan origination in the last 12 months. So really looking forward to all the participation in the future with the mortgage calculator and with our MLOs and investors on this call.
All right on. Well, thank you, sir. So yeah, a lot of great options for bank statement. That was a good detailed dive to show that we can give you those quotes in about 5 minutes on any of our programs. So the show is just to show, a general option. Once you get with one of our loan officers, you can get that full detailed breakdown with all the options and click one button to start your loan. So let me go ahead and pass it over to Kyle, who can kind of wrap it up and explain how to get with our team.
Yeah, absolutely. Thank you. So we have over 350 loan officers all across the country. We're licensed in 16 states. And when we go into the business purpose, DSCR and investor type loans, fix and flips, we can do those in most states, right? So definitely get with one of our loan officers. If you're already talking to one or this was shared to you by one of them, definitely get with them. As Nick said, they can quote you. If you're not paired up with a loan officer already, feel free to visit themortgagecalculator.com and you can actually apply on that site. It's actually right here below me, themortgagecalculator.com. You can also send us an email, info@themortgagecalculator.com, and we will pair you up with one of our loan officers. And one thing to keep in mind is our loan officers are not only trained to be able to help you with conventional FHA, VA, USDA, all the regular types of loans, but we take it a step further with our loan officers, and they are trained in these non-QM programs, right? The bank statement, DSCR, fix and flip, all these different kinds of programs, they can consult you through the process. So 99% of loan officers are not very familiar with these type of products or have done these type of products. So we make sure that our loan officers take it to that next level and can help you with any loan program that you're looking to do. So definitely go ahead and contact us, info@themortgagecalculator.com, or visit themortgagecalculator.com, and you can apply right there on the website, and we can get you a quote within a few minutes, as Nick said. So thank you, everybody, for tuning in. We will see you tomorrow at 11 a.m. We do this show 11 a.m. every weekday, so we will see you then. Thank you, everybody, for tuning in. We appreciate it, and we will see you tomorrow.
Thanks, everybody.